Two, one. All right. Hello, everyone. Welcome. Let's get back to welcome to post U.S. Election Day live stream. We will be discussing the election in depth now. Just kidding. But we will be discussing private markets and Gen Z VC. And you might notice I'm not Adam. Adam's wife is in labor. He's having a baby. So, congratulations to him on creating human life. And I'm here filling in. I'm Jan, co-founder of Sacra. What we do at Sacra is create research on private companies. And we've partnered up with Sandhill to bring you these weekly live events for a while now. And we bring on interesting folks, dig into specific topics of interest to founders and investors. So yeah, check out Sandhill. They do these events. They have a great newsletter. They have a syndicate. And check out Sacra as well. We also have a newsletter. So we have a really great, exciting panel today, continuing on this kind of recurring theme of youth. We recently did an event on high schoolers going straight from high school to the league, so to speak, and building startups. And today we're talking about the phenomenon of Gen Z VC, not for the first time. And we're fortunate to have two really great guests with us. So David and Adarsh. I'll just do a quick intro here, but David and Adarsh are co-founders of Comma Capital, which has been around a little over 4 years, doing really interesting stuff, pre-seed, seed fund, helping founders from sort of the earliest stages with support from over 450 millennial Gen Z operators across fintech, digital health, and SaaS, helping with biz dev, hiring, fundraising, that kind of thing. And so Adarsh is Director of Strategy and Investor Relations at DTech AI, previously at Flexpa and TruePill. And David previously worked in growth and go-to-market at Rudder and Amplitude. So just a quick intro for them, but I think I can bring them in and they can give a little bit of a more introduction of themselves. So yeah, David, Adarsh, welcome. Would be great to have both of you kind of, just like briefly introduce yourselves a little bit, talk about yourselves.
For sure. Happy to give the quick intro and get started, and then pass the mic on to Adarsh. But thanks for having us, Jan, and the whole Sacra team and Sandhill as well. Excited to share a story and some of the insights around building Comma Capital over the last few years. Just a quick personal background. I grew up in the Philippines before coming to the US for college. Ended up studying computer science and cognitive science at the University of Pennsylvania, which is where I met Adarsh my freshman year. And so that's over a decade ago now, back in 2014. And we were playing basketball and became fast friends through that. And basically throughout college, I was very interested in learning about starting my own company, and started out by writing about startup founders, initially for a personal blog, and then ended up cold emailing Ariana at HuffingtonPost.com, and she replied, and I was able to become a contributor for Huffington Post and Inc. magazine. And so for my 4 years in college, I was just interviewing startup founders and investors, and that's how I got my early start about learning about startups. Met the founders of Robinhood back in 2015. We were less than 10 people, and wrote one of the first articles on them, and then ended up joining Dorm Room Fund as well, which is a student venture fund that First Round Capital had started, which was a great introduction into the world of venture, learning from the team at First Round and seeing how they build communities, which is an area that we still draw inspiration from today. And then shortly after, I ended up moving to the Bay Area post-college, spent a few months working at Learn Capital in the future for education space before joining Amplitude, which was a product analytics startup. I was there for 3.5 years from the Series C to when I went public. And during that last year and a half was when Adarsh and I started talking about this opportunity to invest in some of our friends who are talented engineers, product managers, operators who are going on to start companies and coming to us for advice around, how do I get connected to VCs? How do I think about raising an angel round versus a pre-seed round versus doing an accelerator versus how do I run a tight process? And we started playing matchmaker between these folks and some of these bigger funds. And the rest is history. And I'll pass it on to Adarsh to just give a quick introduction to his background as well.
Yeah, absolutely. Thanks, David, and yeah, thanks team for hosting us. We're really excited for it. So, yeah, on my end, I started off in the later stage investing world, so kind of growth equity, private equity, lend, and quickly realized that I also wanted to get some operating experience. So, worked at a number of different startups as well. Started off with Truepill, which was the kind of pharmacy as a service for a lot of these direct to consumer healthcare brands. Super exciting experience. Was on the BD team there. Saw Truepill grow throughout COVID, and so it was a really unbelievable experience there. Kind of seeing a company grow super quickly and kind of the operational workflows behind that. Then joined one of our portfolio companies, Flexpa, where I was head of partnerships, and then ultimately, most recently, DTech before joining the fund full time, and yeah, it's been really great experience. Really continuing to wear that investor hat, but then now leaning a little bit more into the pre-seed investing world, continuing to wear that operator hat. Despite us being investors at our seat at Comma.
Sweet. Sweet. Yeah, maybe to kick off, we can sort of talk through the early history, the story of you guys meeting in college, and how you sort of started thinking about venture capital together and like breaking into the business.
Yeah, for sure.
For sure.
So it was interesting. We had always thought about, companies that we were excited about at a high level. I mean, obviously, David spent time interviewing them in particular. And it was just around COVID when, we kind of threw around the idea of like, why not, formalize our investing a little more. We're talking to a lot of interesting founders and oftentimes meeting them before like some of the more brand name funds were. And so, we kind of, toying around with the idea of like what would that look like, who would we bring in, and that's when we kind of learned about the world of SPVs and angel investing, kind of angel syndicates. And so started off kind of toying around the idea, and ultimately found an interesting investment opportunity where we were able to bring in a lot of our kind of colleagues, coworkers, friends, all from kind of the tech ecosystem broadly. Think software engineers, product managers, etc. And that was a very interesting experience because it allowed us to think through what it is to actually invest in a company, bring toward capital, write a memo, build a thesis out, and then ultimately make the investment. And so that was what really kicked off the informal nature of what Comma Capital is today, which is really, as David mentioned, the matchmaking of really exciting operators, building relationships with them early, and leveraging both our expertise and then our broader network's expertise to help the founders that we invest in.
Yeah, and I'm happy to share just concrete early day stories. And so I remember when Adarsh and I did our first SPV into this company called Fresh Paint. This was back in March 2020. And funnily, what gave us actually the opportunity to put together the SPV was a lot of the venture markets decided to take a pause when like COVID hit. And so a lot of these companies were taking much longer to raise their first round of funding. It's like during that March 2020, April 2020 time period, people were trying to figure out like how to approach this new world of like Zoom investing and like not being able to meet the founders in person before jumping in. And so we had this opportunity where I'd met the founders of Fresh Paint back when I was at Amplitude because they wanted to partner with us. They were in the customer data platform space, and I had known about the space and had spent time digging in. And so I gave Adarsh a call and I was like, hey, like there's this company I'm really excited about. Like, what do you think? And Adarsh was like, honestly, like, why not make this our first SPV? Like, the space. Let's call up some of our friends. We have a little bit more time because it was COVID and people were slow to like invest in companies, and so that's really like what kicked us off. And as Adarsh mentioned, we hit up a bunch of our friends who were older alumni and like friends who were working in finance and like software engineering and like product that believed in us and were excited about the opportunity and ended up being the first LPs to like these early SPVs. And that company Fresh Paint just recently raised their Series B at the start of this year, and we're definitely like very grateful to have been part of the journey the last like 4.5 years since that first investment.
Did you guys have any trepidation about Zoom investing? I mean, I kind of presume not, but just curious.
Yeah, it definitely was an interesting time, and we had to figure out how to adapt. I think it was helpful, at least in that first case, where we knew the space pretty well. I had met the two founders in person prior, and then we had a little bit more time to like diligence them because of the slowdown. But yeah, definitely lots of crazy stories from the boom times of 2021, 2022, and 2023. It's like things went like haywire. But it was also a great way for Adarsh and I to accelerate our learnings as we started that first fund that we first raised at the end of 2020. And yeah, definitely like very thankful for like the early believers that we had. We had a few mentors who had worked at some of these more established venture funds, and we were asking them at that end of 2020, like, how do we have done a few of these SPVs. We've put together this like community of really talented operators. If we were to start a fund, like what should we do? And one of them was basically like, hey, if you guys start a fund, like I'll be the first LP. And that's kind of like when we incorporated next day. And I think that also gave us a lot of belief that like this is possible. And even in this Zoom world, we had people who were willing to like believe in us and who haven't met us in person either, and we're willing to like take that leap of faith and invest in us too.
Nice. Yeah, I mentioned it in my intro. You guys have both mentioned the big community of folks that you have sort of on tap here. I'd love to hear a little more about sort of like how the community came together around you guys and like what you see as being kind of distinct about that community.
For sure. Yeah, I can start and have David fill in too. But yeah, as mentioned, the initial community started off with that very first SPV. And as we learned thereafter, that's what founders appreciated the most, the actual operators that could be in the trenches, be future hires, help with business development, be strategic soundboards. And so we concretely decided, look, I think if that's what founders appreciated the most, why not figure out where we believe the like top talent and top companies are, where it makes sense for us to build networks more tangibly, which can, at that point was on Slack, just given COVID. And so we very meticulously went through an exercise where we determined what are the top 75 companies that we want operators kind of in the broader network from. And so we went down through that exercise, and I still remember like we were calling, we were asking all of our friends like, hey, who's your smartest, engineering friend at Datadog? Who's your smartest engineering friend at Snowflake, etc. And we went through that list kind of one by one, and ultimately like created the community as a way in which other people could meet like-minded individuals in a time where broadly, like obviously loneliness was on the increase, but then I think even just generally, aside from whether there's a pandemic going on in the world, I think people of like-minded nature and intellectual nature want to connect with other like-minded individuals. And so that was kind of the nexus. The Comma Collective is what we called it. And then from there onward, we started to see a lot of kind of organic traction where people were like, hey, look, I really enjoyed meeting other individuals that are interested in building in areas that I'm interested in. Can my friend join? Can my colleague join, et cetera? And so from that point, it started kind of rolling organically, which is really cool and exciting for us. But yeah, it really did start off with that, first SPV, then, broadly within like some of our other friends in the Penn ecosystem, to then broadly companies that we really respect today.
Yeah, Adarsh and I were sending a ton of LinkedIn DMs as well, as we were thinking about like, oh, like we want great people from certain companies that we think are going to lead to like great founders, whether that's like a company like Samsara, for example. I remember cold DMing like one of our early members 3 years ago, and then we invested in him and his company last year. And so much of it is like we were sending, call it like 10, 15, 20 LinkedIn DMs per company, and we'd maybe get like 1 or 2 replies, and then one person that's down to join this weird community that we were starting, and that really started out as like our friends that we had known, but then eventually quickly expanded to friends of friends. And I think part of it too, honestly, was people were just like bored during COVID and like wanted to be part of like an online community. We would host these like online Zoom events, like Zoom happy hours, and that was like really resonating with people. And I think the other insight too that we realized on the flip side with founders is that founders were much more willing to talk to us before they were fundraising because we were operators that could introduce them to like customers that we could be potential partners. We could help give them insights on the operating side. And so we just started to see that as like an edge as well, where us being in our day jobs at that time at Amplitude and Adarsh at Truepill really actually allowed us to like get to meet some really interesting both founders, but also like other operators versus if we had started out as full-time VCs, where a lot of these folks are like, oh, like, do I really want to talk to a VC now, or should I wait till when I'm ready? Versus for us, we could be very like genuine and just be there to like help them. And like really, that's the culture we've tried to like maintain in our community. Is like our goal, and like if we can help like each person that joins our community meet at least like one or two new friends, that's already success for us. I think that's like a big part of like what we try to create. And like you have a lot of these like very professional networks, but we've tried to like put like a very friendly feel into this, very welcoming. It's like people that they don't need to like know too much about venture. Our job is to actually help them better understand like how does venture work, like how does angel investing work, like how do the incentive structures of like VCs having these LPs like impact like decisions that they make, and that has like informed like some of the educational programs that we run for our community members that our community members very much like appreciate.
Nice. Yeah. 2021 was like a golden era for building Discord communities and Slack communities, as I know. So yeah, awesome. Yeah, you sort of touched on this a little bit, but can you sort of talk about how you started building relationships with GPs and sort of getting that side going?
Yeah, for sure. So I think from our standpoint, we we realized that we had different areas of expertise. Obviously, David had spent time at Amplitude, so knew the DevOps data infrastructure world. Myself, having been pre-med actually some point, to then eventually working at a couple of healthcare companies, realized that that's the area from a vertical standpoint that I was interested in. And so the way that we thought about it, I mean, obviously, David having been in Dorm Room Fund had, met a few VCs already. And then myself, in my growth equity kind of later stage investing world, started to build out relationships with other downstream investors. We decided to kind of split off by vertical and say like, look, who in the broader VC landscape, Series A investors, B investors, do we really respect and want to learn from, quite frankly. But naturally, all of these folks' times is super valuable, and so what we started to do, kind of informally, was try to get a meeting with them, but then also like share our thoughts on the market, companies that we found that were interesting, even frankly like share insights about our operating role at Truepill or Amplitude respectively, and kind of try to build like a mini sort of knowledge expertise of our own, such that we could kind of do a give and take for other investors. And so over that time, we were able to meet a lot of like very interesting downstream investors that we kept in the loop on like what we're seeing in the early stage venture ecosystem, both from like actual company standpoint to broader trends. And so I think that surely helped. And then also just generally offering up our expertise, of course, like on my side of the house, like was seeing a lot within the digital health landscape, a lot of the exciting companies that we're building, especially direct to consumer brands, we're working with Truepill. So, had kind of an inside scoop into the trends that were going on within the broader digital health landscape. And so, that naturally allowed me to kind of inform either diligence processes for some of these downstream investors, or even, generally understand like companies that, I think that are super interesting that they should be, chatting with. And so it was through that kind of relationship of like vertical expertise that we began. But yeah, David, I know Dave, there was like some cold DMing as well involved throughout that. So I'm sure you can share some stories there too.
Yeah, I think Adarsh is probably sick of me reminding us all the time that cold DMs and cold emails are some of the best ways to get in front of people. And I do think funny that, yeah, sometimes like Adarsh and I look back at like, we sent a ton of cold DMs and like LinkedIn's and like emails like in 2020 and 2021. And apologies to like the people who always ask me for like introductions of, oh, like, do you know this person? Because like, 80% of the cold DMs that obviously like Adarsh and I sent, like were unresponded to, even though people like accepted the requests. And so I like my LinkedIn's like definitely a little noisy, but the people that did reply 5 years ago, it's pretty incredible to think about like how everyone from like these like founding GPs at some of these like amazing firms were willing to like reply to us, hop on a quick 15-20 minute call and either give us advice. Some of them ended up becoming LPs after like a quick 15-20 minute calls, just because they resonated so much with their story. And then some of them also discouraged us. They were like, look, like, why do we need another venture fund? like why is everybody and their brother starting like a VC fund right now? But all of those, I think, just gave us appreciation for how one small a world this venture world is, but then two, like just playing the long game as well. Like there were like a big chunk of the people that we got to know 5 years ago were folks who were also just starting their venture careers. These were like associates who were trying to hustle and wanted to like talk to Adarsh and I, because to Adarsh's point, like we were in the industry, we knew like the nitty gritty of like everything happening, like the modern data stack and like the digital health like boom. And so people wanted to like chat with us as operators. But the funny thing is like, like these associates that we became like good friends with 5 years ago are like now the next generation general partners of like some of these like brand name firms, and we're just like friends with them. We've traded notes over the last few years. We've gotten in drinks with them, like we've gotten to know them on a more personal level, and we've kind of like followed them along this journey, which I definitely think it's made it a lot more fun as well, and like also made some of the hard days like like not as bad when we're able to like build like these genuine relationships with people and get to work with them, and now have them like lead the seed, Series A, Series B rounds of some of our pre-seed investments.
Cool. So yeah, a lot of stuff you guys have talked about. One is obviously the community of operators. The other one is kind of this vertical focus, digital health, modern data stack. I'm curious to sort of synthesize all of this into like the vision for the fund. I'm curious kind of how you thought about like, I guess combining all these sort of like positioning and advantages into like a thesis.
Yeah, for sure. So, I mean, look, I think for us, we realize that, and especially now more than ever, we need to be, fishing in the ponds of the highest talent density pools. And that to us is a formula to either find really exciting engineers that turn into founders, or even more casually, find engineers, find operators that end up being early hires for our portfolio companies. I think for us, we understand that venture is a very, very, very long game, either from investment to ultimate exit, or from initial relationship to higher placement to eventual investment, then to exit, right? So for us, it's like really about maintaining and building out those flywheels within, our ecosystem, and understand, where are these high density talent pools coming from, and then consistently engaging those same talent pools in a way that, excites them about venture, excites them about the relationship between us as venture firms, as a venture firm, and, as operators in the same vein. And so, what that really means for us is not only kind of thinking about how we fish in these right pools, which companies we want to consistently kind of engage with from the later stage standpoint, but then also really build very specific events and programming for our community members. And so a lot of those are in the same vein of like kind of that vertical thesis that I mentioned earlier. It's really to kind of cultivate those relationships in the form of events, dinners, smaller happy hours, smaller cohort based programs. And we're doing a lot more now in terms of like really building out programming that members in our community and broader members in operating ecosystems kind of rely on. And so from our perspective, it's how can we identify really high quality, really spiky, and really intellectual folks within the verticals, and then build out infrastructure, products, programming around them, such that we can get from their journey from, operators to eventual founders at a faster pace than, if they were to do it themselves, which, has frankly allowed us to hire over 50 people for our portfolio companies, make hundreds of introductions from a business development standpoint, and then, have that flywheel, feed back on top of itself, where, we have folks that we've placed that have now become founders that, can really resonate well with kind of that comma story of, going from 0 to 1 and really having the right infrastructure to push them along the way.
Yeah, the only things I'll add there is, definitely over time in the last 4.5 years, I think Adarsh and I have just tried like a ton of different things, but that's also allowed us to like keep honing in on like what's working and what's not. And definitely the piece around continue to build, the talent network that Adarsh had mentioned, and leaning into like our strengths. When we think a lot about, we tell founders that, oh, like software is so competitive these days, and you have to think about what's unique about you, your differentiation, and like what you're really good at. I think Adarsh and I have spent a lot of time introspecting around that as well, given, like we're on the younger side, and we don't have as much experience potentially as like some of these other investors and partners. But where we could lean into is, we know these folks who are Gen Z, millennial, kind of like engineers, like 0 to like 5, 6, 7, 8 years out of college, and those are our friends, our peer group. And how do we keep doubling down on that? And then how do we continue to get to know the future generations as well, which is like why we've started doing like programs around the best engineers in universities, people who've just graduated, connecting them to mentors, connecting them to our portfolio companies. Because I think that's truly where we could keep building and like have an edge relative to like other venture firms. And then all the activities that Adarsh mentioned, we want to make sure that it funnels into that core goal around finding those like most talented like engineers and builders at like the cutting edge, who are like rising stars versus like the established people. We want to bet in the underdogs. We want to bet in the people who are up and coming. We want to bet in the overlooked, that overlooked university student who might be an immigrant who wants to start their first company or wants to join a startup in our portfolio. And so, I'd say like we've doubled down and have like a lot of emphasis around that. And I think the second thing is we often tell our founders, like, we're a startup in ourselves. Like we're experimenting. We're trying to figure things out. Like we want to move fast. We also want to learn from every single thing that we do. We're early in our careers. We have a lot to prove, but we're hungry, and like we're gonna work really hard. Like we want to like constantly be doing things. It's like constant application of force. We want to be replying to you as fast as we can. We want to really like be like a partner in that way. And I think for certain founders that definitely like resonates, because we're able to empathize with them as well, of like how hard it is to like build something from the ground up and really like get things off the ground.
Cool. You mentioned sort of not being as old as other investors in the space. The area where I feel like that might be the most tension is meeting LPs who are, typically a little older than general partners, aren't as active on maybe responding to LinkedIn DMs. So would love to hear more about kind of that side and how you built relationships with these folks.
Yeah, for sure. So look, I mean, I think ultimately like venture is at the highest level, about finding the highest quality of companies and then being able to, invest and get the right ownership to drive venture returns, right? I think that, back to the basics principle, like spans, age. So to the extent that we're able to do that, I think over time now has definitely proven out, very relevant to, your associate who's just joining a venture firm to their general partner. And so I think over time, like, of course, at the start, especially, there were a lot of questions around like, hey, you're definitely younger in your journey. You don't know as much from an investor lens, which, is definitely fair. But to the extent that we're able to continue to, tap into that high density talent pool and quality pool. And then kind of on the flip side, as it relates to, invest and get the right amount of ownership, is really about, providing that value infrastructure And I think what's more and more interesting on the point on kind of that age gap or generation gap is that, a lot of the tools now that founders are working with, engineers are building on top of, and, broader how software engineering is being done today is actually, a very changing paradigm where, obviously like 5 years ago, you're not going to be leveraging like Copilot and other ways in which, you can actually build kind of early MVPs. Whereas now, a lot of the younger generation is building that from ground up and not having to unlearn things that they had to in the past. And I think it was LaFont of Co2 on the private side that had a chart that showed like over time, like now founders are getting younger and younger, and the future of venture or future of foundership at least, and therefore where venture investors should be tapping into is getting younger and younger. And I mean, there are definitely examples where there are super exciting and successful companies being built within, Gen AI or otherwise, where there are, founders that are, just out of school, for example. And so, I think, again, we just have to continue to understand what the basics of venture are, which is investing in high quality of founders and getting the right ownership into those businesses. And to the extent that we have the right messaging in place and right infrastructure in place to do so, I think that's what LPs ultimately are resonating with.
Yeah, but the other thing I'll add is we, like Adarsh and I, over the last 4.5 years, have also learned about like the LP game for sure. I think like it was very like opaque for us like 4.5 years ago. We were like, how do we even get in front of some of these like fund of funds, like family offices, endowments? Like, what do they even care about? Like, how do we even get them to take meetings with us? And so once we had to like graduate from having that like VC kind of like LP base and like friends and family towards starting to like try to raise from some of these like more institutional fund of funds, like we definitely had to start learning like what that game looks like, and we're still learning today. Like even like this morning, like we got like very direct feedback from one of the institutional LPs that we were talking to, and like how to present better when it comes to like these like larger LPs. And I think every day like Adarsh and I are like hungry to learn, and we want to like get better at this game. But it's definitely like a game in itself. But at the same time, we're very cognizant that we need to like value those like relationships, because that's where the capital comes from. It's like a long-term partnership, and we also want to be good stewards of capital, and we want to show people that we're not just like operators, but we're also investors, and that we're gonna take care of that capital, and also like hopefully generate like really great returns for the LPs that like believe in us. And then I'd say the last thing is it's such a long-term game, as we like emphasize around like each part of like all these venture relationships. But like some of the LPs that we've been talking to, we met like 3, 4, 5 years ago, and like our anchor LP for the second fund, it was like 3.5 years of getting to know them before they invested in us at the end of last year. And like and so very much I think people at the end of the day, it's like a people game as well for these LPs, and they want to get to know us. They want to understand like like what motivates us, like if we're gonna stick to this in the long run, and how we think about like investments, partnering with founders, like Adarsh and I's like working dynamics and relationship. And so I think every week we're learning new things about LPs, and and hopefully we only get better from here.
Nice. I feel like we're deep enough into the talk that I can ask, like, do you guys actually consider yourselves Gen Z or cusp? Because you both graduated 2018, right?
Yeah.
So that cusp? Is that Gen Z or millennial? It's like a little bit on the cusp.
Well, it depends.
Depends if we're talking to
Yeah, exactly.
Yeah, right.
Yeah, if it depends, we're talking to a Gen Z, Gen Alpha cusper, then in that case, they don't consider us Gen Z. And then the other way around, if we're talking to a millennial. So I would say it really depends who we're talking to.
We both have younger siblings, and they would definitely call us like millennials for sure. but I think as we've honed in and like trying to get to know the best young engineers, we're like, no, I think we could be considered Gen Z. And like how do we be slightly cooler? Or how do we start talking to Chat GPT more? Or like how do we like integrate all these like quirks and tooling into like our daily workflow? But yeah, I mean, I think we're in the cusp. Maybe like some people, like these Gen Zs will probably think that we're millennials, but hey, we're trying to be cool too.
Yeah, no, it's perfect. It's perfect positioning because you can be whichever one is advantageous to you in the moment. As long as you have like some of the some of the lingo.
Right.
Yeah, Zillennials. Yeah, there you go.
Nice. Yeah. Cool, man. Yeah. So one of the things that kind of stuck out, looking at the fund, looking at your backgrounds, is that like generally VCs who are like younger are like always like positioning around consumer, where there's like since like Facebook, Snapchat, there's this legacy of like young people spotting trends that everyone then wants to invest in later. You guys have kind of positioned differently, with this core focus around your sort of vertical knowledge in SaaS and fintech and digital health. So I'm curious kind of how you've thought about that and or like positioned it as somewhere where you have advantage due to youth and proximity to actually operating um, in these fields. That's not just the traditional kind of like consumer trend kind of awareness story.
For sure. Yeah. Look, I think for us, we have to understand where we have the right to play, if you will. We, as operators, have never seen, consumer land. Of course, we can, look at an app, kind of see emerging trends, but that's completely different than putting on an investor hat and you understanding like what is the ideal 6 month churn to the MAUs for like different businesses, and what's kind of like the best quartile within a consumer like setting from an investor standpoint, right? And so while I'm fine using like a Snapchat and some of these consumer apps, I think understanding what actually drives success within consumer is definitely much harder for us to kind of determine from an investor land standpoint. Whereas as operators in the end of the day, and through the knowledge, like the broader knowledge network that we've curated through the Comma Collective, I think we understand B2B, a lot more. We understand healthcare a lot more. And, for us, it's only, right for the founders to be partnering with people that can actually help along those ways. Whereas, I can chat with a consumer founder and say like, hey, this is a cool product. I would use it, to, actually having like a very in-depth discussion with a founder building in B2B and understanding like, hey, you should really think about, conference channels and like how you actually spend capital for, a booth versus a select dinner. How do you measure ROI for, actually driving this, channel, which, you may not have actually explored, to ultimately making your first business hire, to ultimately, thinking about like growth marketing, to like very, very relevant and tactical, touch points where we can help. Just in the end of the day, like gives us a lot more, purpose in terms of like how we invest. And then also from the founder perspective, I think they get a lot more from our capital and our expertise that way versus, us being a user of their product.
Yeah, but definitely, I think obviously over time, like our operating experience, like atrophies as well, and like the more and more Adarsh and I start to get removed from the operating world, we understand that like things are changing really quickly, and like ultimately the game we're playing is like pre-seed, and like we're mostly like investing in people. So I think while I think at the start when Adarsh and I first started, it was extremely helpful for us to be focused on these like verticals where we had experience, network, because that was our way of getting our foot in the door, and like a great way for people to remember us, such that whenever they came across like a data company or a healthcare company, they would send it to Adarsh and I. But today, I do think our investing has like evolved towards where we still want to have these like majors where we want to continue doubling down on our expertise and knowledge around certain verticals. But at the same time, we're also very bottoms up, where we know great founders can come from anywhere, and it's like very people based, and these ideas can change and they can pivot. And when we're investing so early now, as we've moved earlier to doing this, like being the first investor oftentimes in these founders, like yeah, we're mostly trying to improve our intuition and like and understanding of like how do we find like these very unique special founders, and like what are the questions we should be asking, like how should we thinking about them, like what have we learned over the last 4.5 years. And I think that's very much more how the game is evolving. But yeah, I think we like to like layer on like different ways of thinking. So I think it's always still helpful for us to like have the operator lens, have the industry lens, and then ultimately have like the people kind of like more psychology lens as well.
Cool. Yeah, David, you alluded to this earlier, sort of, starting a fund during this 2021, 2022 era of venture. You mentioned crazy stories, it'd be great to hear one, and also just sort of hear overall your guys' experience, starting a fund in this era. You mentioned how it was sort of in some ways you had it was facilitated by COVID, but like, how about those kind of years afterwards, and obviously all the craziness that we saw?
Yeah, so many crazy stories that I don't know where to start. I feel like Adarsh and I text each other every day. We're like, oh my god, I can't believe that just happened. And so I I do think probably some of the things that we did see in the 21-22 market was just how fast fundraising rounds were happening, and how every single week it almost seemed like everybody we knew was starting a company, and they also wanted you to decide like 1 or 2 days later if you could invest. And like everything felt like a super hot round basically, which obviously like made it extremely hard to like operate in that environment of making decisions really quickly, being able to like diligence the people, but also like think through the market, have a perspective. And like frankly we made some like mistakes like looking back. And but yeah, ultimately venture is like this like power law game. And so hopefully yeah, we have like a couple of companies that will end up being fund drivers despite like some of these like yeah, like mistakes that we might have made, or like but I will say crazy things. It's funny that you asked that, because we're starting to see some of that again now with like the AI hype cycle. But yeah, I remember in 2021 like when it was so hard to get into companies that funds had to start writing like uncapped notes into these hot companies, and we did that ourselves, and some of those ended up converting into like really crazy prices as like multiple. We saw like 100x, like 200x multiples in ARR, and very much like yeah, like I think a lot about that as we enter another hype cycle with like AI, where Adarsh and I are like constantly talking about like, oh, like how should we approach this? Because even our existing portfolio companies that have grown really fast are starting to get like some of these offers again at like these growth rounds, and we're starting to think about like yeah, like how do we approach like advising our portfolio companies? How do we think about it from like a potentially like the returns on our positions, and like what we want to do with those when we start to see some of these crazy rounds again. But yeah, I definitely say like a lot of just insane like multiples is probably like what we saw during that time period, and just having to like make decisions constantly, where I think Adarsh and I were always like running around with like our heads like cut off in some ways, and like just trying to like constantly juggle things that were like, oh my god, we have to make that decision, this decision. And but yeah, I mean, I think in the flip side, it definitely accelerated our learnings, and I'm glad that we went through that market cycle, because and have the opportunity to like keep going. And I'm glad that like half our Fund One portfolio, despite that market cycle, we had invested in like extremely early pre-seed bets that were like really low valuations. Which it's funny because like those are the companies that are breaking out now, versus our companies that we invested in that were like extremely hyped and like raised a ton of capital in like the 21 period, are the ones that like aren't doing too well. And obviously like all of these like comes in cycles, and like you never know until like the exit event. But it definitely gave us much more appreciation as well for like just how hard it is to like build a great company, and like what happens when when there's like excess in the system and you raise too much capital, and like the type of people you're able to attract when you're like hiring employees. And when yeah, we've had portfolio companies like grow from like 8 people to like 50 back to like 20 in the span of like 6 months, and like have to like really like burn a ton of money and like cut really quickly after realizing that like yeah, like product market fit doesn't happen overnight, and hiring more people doesn't create product market fit. And like you got to be really intentional about like decisions that you make when you're building a business.
Cool. Yeah. Adarsh, any crazy stories to add? I mean, it does seem like a good, way to get started. As long as you survive, you get a lot of learnings in a very short amount of time.
Yeah, no, for sure. I mean, look, I think the craziness, I mean, within the broader market was just, everything from companies that, went from zero to unicorn valuation to zero again, in like literally the, kind of micro cycle we were in there. They weren't portfolio companies of ours. And I think like the craziness that happened as a result of like, folks, over hiring and, just throwing people at the problem creates a lot of internal craziness within the companies more than anything. Like, investors, of course, are, attuned to what's going on from a higher level. But then when you see what's going on at the actual company level, it's like another level of craziness, right? And so you have founders that sometimes go rogue and make a decision that just because they have the capital they can. And an investor isn't necessarily always apprised to what's going on from that perspective, but as the employees of that business, you're like, what in the world is going on? Like what made said founder make that decision? And people just like, us, like, we're making quick decisions and, having to, as David said, in some cases run with the head cut off, like for sure was happening at companies level, at a more granular standpoint. So, I think though there was a lot of craziness that we were seeing from the headline front, surely there was like, multiples of that craziness actually happening at the operational level at companies.
Yeah, and I think we can't fault founders as well, because like in some ways, like it's the investors pouring in all this capital that honestly like led to a lot of this like crazy behaviors where, yeah, if I was in the founder's shoes, like why wouldn't I take more money at like less dilution if I could? But yeah, it's crazy to just see like how the incentive structures of like having excess money really changes the behavior of people, where you're just like a lot less disciplined. Like we saw some of the most disciplined founders just like lose control in terms of like spend during that time period, because yeah, I think when you don't have constraints, you just lose focus. And so I do think it's made Adarsh and I better appreciate as well, like the power in like constraints. And that's something that we talk to our founders a lot as well when they're thinking about like raising those next rounds. It's like, yes, it's nice to have additional money, but yeah, you also want to be careful about like making sure that you're still creating the right incentive structures for yourself, right incentive structures for the employees that you're recruiting, and like the people you're trying to attract, and and I think there's a lot of like externalities that people don't often like associate with some of these like crazy rounds.
Nice. Yeah, I think that's a good segue. If we start sort of talking lessons learned, over the 4+ years you guys have been doing this, maybe to start, it'd be great to sort of get like lessons learned from raising fund one, and how you've applied those lessons sort of with follow-on funds.
For sure. I think again, like David and I really appreciate going through that cycle, because what we learned is, just because a deal is quote unquote hot, or is being backed by, some of the top tier funds, which we definitely respect, does not mean that, the business is, going to be a sure success without a doubt. And obviously, like a lot of folks really appreciate the fact that you're co-investing, or getting follow-on investments from like a lot of the top tier investors. But in the end of the day, a business has to be built like a business, operated, and then ultimately, finding an exit path altogether. And, there's so much within that process, from 0 to 1 to 1 to 10, to 10 to 25 to 25 to 100 plus to, now in the public markets, like, 200+ million of ARR, right? And so we really realize the fact that, we are investing in businesses that are still in the 0 to 1 phase. And ultimately, it doesn't really mean, I mean, obviously in terms of like, quality and, for potential hiring, doesn't really, mean a company's going to be a success if, a top tier fund is in. And so that is really what drove us into kind of the pre-seed strategy for fund two, where what we realized our superpower is identifying really high quality engineers, high quality founders, with Fund One, we were kind of doing that in from the perspective of, okay, we see these high quality founders. Now we see this high quality fund. Let's make an investment. But now we're leveling up and understanding that we know what these high quality founders look like. We know what these funds really appreciate as well. Why not invest in them earlier and even accelerate their journey, going to 0 to 1, and then kind of loop in our downstream investor friends accordingly, which is what really pushed us to do that pre-seed. And frankly, related to that is also understanding where like the comma founder fit comes into play, in this sense that oftentimes these are individuals that are early into their operating career, where they're hungry enough to start businesses, but oftentimes they're first time founders, engineers that don't necessarily know the venture and fundraising landscape as much. And so it's our responsibility, of course, in addition to like helping hire for them, helping find co-founders, to all of the things that are important with regards to the risks associated with pre-seed. But then also really helping founders, put their vision into the world and communicate that effectively to investors down the line. Because I think in place of the kind of excess, multiples, or you can call it like excess valuation that is determined in a seed round versus a pre-seed, there's still like fundraising risk then that we're taking on by making that first check investment into pre-seed. Is there going to be future fundability for this business? And our responsibility is to make sure that, so long as we believe that this company should exist, there's product market fit, that we can help the founders communicate their vision to other investors down the line. And so I think like that is, our key and biggest learning, within Fund One and Fund Two, realizing that, venture truly is a power law. And just because, a deal may be quote unquote hot, ultimately, even these top tier investors don't have, 100% win rate. Oftentimes their portfolio still follows an 80-20, if not a 90-10 kind of principle. And so that really pushed us to move into pre-seed and really understand where our right to play is as investors.
Yeah, and the only thing I'd add there is just kind of like just the importance of these like building these long-term relationships and really playing the long game and taking like a really long-term view on like all of these things. I do think we're very thankful for all of the first LPs that invested in our first fund when we were very much unproven, where Adarsh and I were still in our operating roles. We were like 24 at that time when we raised that first fund, and very much like people had no reason to like give us money, but these people were like betting on us. A lot of these first LPs were people that had known us for a few years, or who had been like our intern managers, like our friends, and then we also had people who we had just met in like 30-minute Zoom calls and were willing to cut us a check, and we definitely don't take that lightly, and we want to make sure that we do a really great job, and I think we often make sure to like remind ourselves that we need to be communicating with them regularly. We send these like monthly and quarterly updates. We want to make sure that they know what we're doing, that we've stuck to like what we told them that we're gonna do when it comes to like deploying this capital, like despite like the craziness in the market, and that we're also like just like trying to give it like our best shot as well. And I think like LPs like definitely like appreciate that, and I do think. And at the same time, I think like we've also had to learn how to be like nimble and to also like evolve our thinking as like we've grown as like fund managers, right? Like I think to Adarsh's point, that there are things that we thought when we first started investing that we don't believe in as much today, and I think we're constantly trying to push ourselves to think about like how do we get better as like fund managers? Where is the alpha for us to be investing in? Like how do we generate like outlier returns? And we're willing to like experiment and like try new things. And I think that's what has allowed us to go from that Fund One to that Fund Two. Is like as Adarsh had mentioned, we had moved from like co-investing with these like brand name funds towards really like building our own judgment and starting to like be the first investor before anyone else, and like making that leap towards being that first partner to founders and working very closely with them. And I think that's what we do today, and that might evolve like a few years from now. But yeah, we just want to keep learning as we keep doing things, and then like making sure that we communicate that as well to like the people who like gave us a shot and like were our first believers, and hopefully yeah, like in a similar vein, we're also able to be that first partners and believers in a lot of these like founders that we end up working with.
Nice. Cool. Getting close on time. So I do want to make sure I ask this question because it seems like starting a fund has become a very popular career choice for people coming out of college, maybe competing with starting a company. So what is your sort of advice to like a college senior who wants to start a fund? Join a startup, join a VC as an associate. I don't know, write blog posts. Huffington Post isn't around, but there are places you could join Sacra and write articles. Yeah, what would you sort of say to that 22-year-old who wants to do what you do?
Definitely join Sacra for sure. Number one.
Exactly.
Go ahead, Arsh. Yeah.
Yeah. Yeah. No. Look, I think in the end of the day, again, in terms of starting a fund versus being an angel investor, those are two different things, right? Like as a fund manager, it is your responsibility to understand the very dynamics that go into venture, which again is very much power law driven, which means you have to understand ultimately the basics of that, which is and I've said it like multiple times now, but it's always worth repeating, finding high quality founders and getting ownership into those businesses. Now, what that means ultimately, like taking a step back, is how can you actually identify folks, ideally before others can, which then drive the ability as someone starting a fund to attain high ownership into these businesses, which then translates to like how do you actually cultivate a network around you of unique people that trust you, that are willing to take your capital. Because ultimately, in starting a fund as an individual, the capital is not your differentiation by any means, right? It's really about you as an individual and your ability to add value to those businesses. Look, like I think when you say start a fund, the implication there is an early stage venture fund. It's very, very unlikely that an individual will be able to start a growth fund or, like a private equity fund right off the bat. And so I think as it relates to early stage venture, it really is a people's game, and building relationships with individuals, understanding what your right to invest is in those businesses, and then really like what value do you bring thereafter, because it's not again, it's not about the capital. And so to answer your question more directly, that can come in the form of being an operator, being someone that can build like kind of vertical expertise that a founder will come to you just to ask and understand more specifically, like, hey, I'm building a business in XYZ. I know you were operating in ABC. Like, how do you think about these things more specifically? And those casual conversations then ultimately turn into investment opportunity. And I think to that point, like I think being an operator is very, very, very valuable. And I think founders definitely respect that. I also do think like being a VC associate is also valuable. You get to understand, what it means to be an investor, what it actually means to kind of run through kind of deal sourcing exercises and, building, like figuring out like what it actually means to build founder relationships, ask the right questions. And those are things like, David and I learned over time, which obviously we didn't have from the seat of like, venture associate world, but, without being able to build the relationships and communicating the value you have, which in, my perspective, at least comes from an operator seat or maybe even a prior founder seat. I think it's really, it's really kind of like understanding what are like the, first principles on, what you're actually bringing to the table. So if I had to say, to answer your question with all of that summarized, is few years of venture associate experience and then on the side, and then like potentially operating experience thereafter. But I think it's always important to build those people networks on the side, regardless.
Yeah, big plus one to like what Adarsh said around building the people networks. I do think, regardless of what people end up doing, because everybody's path is different and like markets are also different, and you just want to try as much as possible to surround yourself with great people. And I think surrounding yourself with great people is a lot of like showing up at these events, meeting like at least one new person, joining some of these communities with great people, sending that cold email and cold LinkedIn DM to people that you look up to, and then putting in the work like every single day. I do think like a lot of things like start out as these like small like seeds that you're planting, but very much like compound over time. And I think you really want to think about like, how do you get started today? Because like momentum leads to more momentum, and like regardless of what you do, just do something and just like start today. Whether it's like helping a startup, like talking to founder friends, going to these events, and then that will like lead to more momentum and like more serendipity. One person will introduce you to the next, and then you just got to keep doing that. I think Adarsh and I, for the first 3.5 years, were in operating roles, plus running the fund, plus like sending out emails every single day. But underlying all of this was like, we love the game, and like so much of it has become like a lot of these founders and investors are our friends now. Like Adarsh and I were in Chicago recently for a founder's like wedding that we invested in, and like we love getting to know these people. We love partnering with them. We love going through the ups and downs with them, and I think that makes it so much easier as well to like put in the work like every single day. So hopefully it compounds over time.
Yeah. And don't do it just because you think it's cool, because it's definitely a lot of work. It's and late hours and all of this, and like if you truly don't love like every day of it, to David's point, like it's definitely not a trivial exercise.
Yeah, good reminder. Great. That's really helpful. I think the playbook is clear. You need to sign up for LinkedIn Premium so you can send I don't know, 200 DMs a day.
Jan at sacra.com. Send him a cold email.
Yeah. I should check those more often in case anyone like you is DMing me. But great. But guys, I think there's a lot of really good stuff here. I'm really glad that I had the chance to be here, even though third string quarterback. But really glad I was able to chat with you guys and have you guys share your insights and experiences from sort of both sides, operating and investing. So yeah, thanks so much.
Absolutely.
Appreciate it. Thanks for having
Awesome.
us. Cheers,
Thanks.
Jan. See you later.
Yeah. And we'll share resources so folks can find you, learn more about you, and Common Capital after this.
Cool.